Hey traders, Raghee here, and in this video let's examine where we are regardless of today's bounce. The best way to look at different levels and to look at the likelihood of continuation is to look at the psychology that preceded the volatility that we saw, and to make sure you separate the volatility that occurred, say, on the Russell as opposed to the volatility that we saw on the NASDAQ. So to look at the stock market as this huge place without compartmentalizing small cap versus tech, etc., even getting down to financials, energies, look at the way in which the NASDAQ behaved in that same, pretty much that same window. So when I look at continuation, the Russell, the RTY, the IWM, that's going to look a whole lot better than the NASDAQ or the QQQ. So then we can ask ourselves, well, if the NASDAQ did recover, where was the relative outperformance here? Well, when you think about NASDAQ, the first way that you should sort of cut the NASDAQ into smaller pieces is with the XLK. This is Apple, this is Microsoft. And it does look, relatively speaking, better than the NAS in that it was able to hold support closer to the wave when the market broke down. But that's not the only place you can look. Also take a look at the XLY. XLY, be really careful with consumer discretionary, because consumer discretionary really took it on the chin. In fact, this move is probably more reminiscent of what we saw in the NASDAQ and the QQQ. So really be cautious wandering into consumer discretionary. What's been absolutely immune to the volatility in tech? Well, this is the XLC. This is your communication sector. Think Facebook, think Google and Goog, right? That's what you're talking about here. And these markets have fared very well. This is where you're seeing most of the strength and the resilience in tech. All right, we can go another layer in and take a look at semiconductors. Semiconductors too have fared much better, probably not as well as communications, but say better than XLK. So now we're going to take a look at the S&P. All right, so now when I take a look at the ES fared a whole lot better than the NASDAQ, which tells me that we have financials in fuego, and we have, what else would I look at? Healthcare. Healthcare is struggling, but financials have been absolutely an outperformer. So when I take a look at the way in which financials are helping the S&P higher, I know that maybe I can take a look at the S&P, but I can focus on potentially financials as well. So when we break down the indices to take a look at the individual sectors, that's going to naturally take you to the outperforming stocks. And I think for a lot of traders dealing with CHOP, it's a great reminder that not every type of market behavior, market trend is ideal for stock picking. CHOP and volatility are. Larger, clear trends like we saw, say, November through middle of January, that's when you want to play the broader tides, the broader sectors. That's where you want to play the groups of stocks. But once things get choppy, you really want to get a little bit more granular, a little bit more specific to the sector and the stock that's outperforming. Let's take a look at the YM, the Dow futures, and do the same thing. Dow futures have held, again, far better than, say, the NASDAQ has. But again, we saw where the NASDAQ strength can be. That takes us to transports, absolutely outperformers. What about industrials? Again, so you can see where the strength is in the market. That's where we want to address our attention. Now, what does this mean for futures traders? Well, this means that the reflation trade continues to be alive and well, and therefore pullback buys in crude continue to be a really good idea. Pullback buys in copper continue to be a absolutely wonderful idea. And focusing in on volume levels like a rolling VWAP, not when I say a rolling VWAP, it's a rolling 10-day VWAP, a VWAP anchor to the first of the month, and a VWAP anchor to the first of the year, and then volume levels that show where the commitment, the participation is waiting. That's where we want to be. Now, it doesn't just have to be energies and metals. Something we've been talking about here in these free videos continue to be the reflation trade happening in grains, happening in meats, happening in softs. So keep an eye on that reflation trade. Commodities are absolutely going to benefit from this environment. And last week I talked a lot about the dollar in our video here, and that means we want to take a look at things like, well, I mentioned the 6B, I mentioned Australian dollar, New Zealand dollar, Canadian dollar in previous videos, and we want to continue to focus on those as well. Remember, if I've got a reflation trade helping commodities, commodity dollars known as COMDOLs are also going to be where we want to put our attention. So as we kick off the week, let's think about where to put our attention. That's what this video has been all about. If we can get the direction right and we can get a focus list right, the setups will come much better with higher probability of follow through from a well-chosen, curated list of names we want to watch. Hope that helped. See you in the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me